Bank that serves the tech industry collapses in the second biggest bank failure in U.S. history. Regulators have now taken control of Silicon Valley Bank.
Fox 8's Jessica Formosa joins us live with a shutdown that's sending shockwaves through the banking industry tonight. Jessica.
Natasha and Steve, it's unclear at this time what exactly this could mean for other banks. Experts we spoke with tonight say this could mean more oversight and regulations in the industry. It all began earlier this week when SVB announced plans to raise up to $1.75 billion in order to strengthen its capital position, aimed concerns about higher interest rates and the economy. We are now hearing from customers who say they have millions of dollars in the bank and can't get their money out. Regulators shut down the country's 16th largest bank, Silicon Valley Bank, which is one of the tech sector's favorite lenders. It's the biggest bank failure since the 2008 financial crisis.
They didn't manage their own risk, and they had way too many startups and not enough businesses that already had proof of concept or already stable. Collapsing
quickly after it revealed a big loss on its bond holdings and surging interest rates, which prompted customers to withdraw their money. Carl Gould is the president of Seven Stage Advisors.
Silicon Valley Bank got to the point where they had way too many of these loans on their books that were non-performing, and regulators stepped in and said, wait a minute, there's too much risk here.
According to the FDIC, the bank had $209 billion in assets and more than $175 billion in deposits at the time of failure. The CEO of Farmbox XR says her tech company has $10 million at SVB and can't pull her money out.
We could not get into our SVB account. I could not to approve the wire out. So at this point, we don't know, what's going to happen to our 8 figures that's in the bank there.
The shutdown is sparking worries that other banks might be in trouble too.
Something like this does send tremors through the industry. In other words, what we're going to start to see is some more oversight, more regulation, and maybe in some case tighter credit restrictions. In other words, you're going to need a slightly higher credit score in order to borrow money. You're going to have more assets.
The White House says this is not the Great Recession all over again.
Our banking system is fundamentally different because of the changes that we put in place in 2008. For example, they have to hold more capital. They undergo stress tests.
The FDIC says all insured depositors will have full access to their insured deposits. That's $250,000 by no later than Monday morning. That said, those who have more than that amount in the bank could be at risk of never getting their money back. Steve, that is a huge problem.
Yeah, it's going to be a stressful few days for sure. All right, thanks, Jessica.